Boy, it just got really volatile again. There's been a lot of bi-directional sweeps. Must have to do with all the talking heads. Like I said, there's been some good trades in here, but now it's really two-way right around the apex of this high volume node here. Okay, we will go through these answers in just a moment, a few moments. Yeah, is he still testifying? I thought, yeah, that would do it. I never pay attention to those things other than just to be aware that they're going on, but I never watch them or listen to them or have a news feed. It's just distracting. The price action tells all. But today, the last, since this all started, the last week or so, it's been real volatile. And it gets really obvious when to stay out or when you can, you could just jump in here and grab this momentum if you wanted to. But, like Lee and I have both been saying, if you're really patient, there's some decent setups, like the long that I caught off the low there during Lee's session. That was a wicked good trade. And, I was kind of waiting for that. And I knew Lee was short, thinking about the structure. And there's lots of trades like that working out, that are kind of just, you don't have much to lose if you try them, is my point. They're asymmetric. So anyway, we're right back on the VWAP again. The VWAP is this blue line right here. And I don't use that for anything. It's not a trading signal, although a lot of people try to make it into one. But, it is what it is, the volume weighted average. And the fact that we keep trading really aggressively right back to it is what I was saying in Lee's session as well, that this it's really clear that there's large money playing in the market, but they're playing the ES like NQ. They're moving around a lot. There's no big liquidity up, and we're trading ranges. And sometimes they're really giant ranges, and they're in price discovery, but they're ranges nonetheless. Anyway, and sometimes they're relatively tight. This has been, considering what we've had the last 2 days, this is a relatively tight range. ES's range is 81 points. So it's a lot smaller than the 160s we've had, but normal's closer to 40 for this price level and this time of year. So it's like double normal. But and gosh, about 40 minutes ago, we went from one end of the session to the other. I mean, in just 2 minutes. It was two 1 minute bars. That was this move right here from the low all the way back up to the what has become the initial balance high, which it took out and made a new high. Yeah, it broke that ledge too. Yeah, this is just wild behavior. All righty, so we got another couple of minutes. JVC, were you going to say something?
No, I'm muted.
Oh, okay, cool. Anyway, we'll get started. Today's session is going to be kind of fun. What we're going to do is we're going to go through the discussion around my post with the quiz, and we'll talk about that particular instance. And then, in addition, we are going to do the stated topic. And if you look at the session title for today, I renamed it because it wasn't really clear what my intention was. U.S. equities initial balance as a range. I added that as a range. We're not going to talk so much about trading the initial balance because that already happened. And then edge and ledge breaks of ranges and high volume nodes, which is a really good day for that. So that's the plan for today. Whether we get any trades or not, here's what I'm going to do. The idea is around the ranges, there's good trades and I'm seeing them. And if I see them, I'm going to take them, if I can get to them fast enough, and then I'll tell you what I'm doing. And I'm also going to do what I do, whether I'm teaching or not, which is, what trades am I looking for? Right now, I'd be shorting the pushes up and I'm buying the pushes down. That's just classic price action, but I'm not doing it at any particular spot. I'm waiting for it to tell me, like this last spot down, that, okay, that's low enough. We're going back up. It's being reasonably predictable. If you look up here, the highs were the same way. We pushed up there, and then this recent push up was another good place to short. But you can't just willy-nilly do that. You have to do that with some tactical approach that's matching where it's moving from and to. So it's not quite that simple, but that is basically what I'm doing. And again, I'm going to explain with respect to the scalping setups a little more detail, and we'll go through the questions and answers around the quiz. So that's our plan for today. And we'll get started in earnest in about 2 minutes. So this has all just been me babbling introduction. So so Lance, you asked me a good question in the private text you sent me about what I look for with the profiles. And I really, for what I do, this way is ideal. I run on everything except the 30-minute. I run the 24-hour volume profile. So I have the whole Globex, all of it. And then on the 30-minute, I run the sessions separately. So this one you're seeing here is the current session, and then the overnight is the one below it, right next to it to the right. And I find that's a really powerful combination on the 30-minute. I don't find any advantage to doing it on fast ones because all I'm really looking for there are, was it a high delta area or not? You almost don't need the volume profile on this one. It just kind of gives you an idea where high and low volume nodes are too. But this is Globex, and all of my other views just look at 24 hours. You've seen my TPO view that breaks them in half. Same thing, one for each. That's this, and that's what I do with that. I find that's the best information for the type of trading that I do for scalping and using structure. I think that's the best split. So here we go again, consolidating right there around. That was a good spot for a quick short too. I didn't get to it fast enough. I just looked at it, but it probably is going to push up. But for the moment, that spot right there was really good. And that's the other thing I'm noticing. A good trade setup will come and you have very little time to act on it, much less time than normal because, things are happening quick. So if you see the setups, you just have to be prepared to take them or not. And a good habit under these conditions is not take them, sit on your hands. But what I'm doing in that equation is I'm saying to myself, okay, I'm seeing setups. And if I feel like it, I'm taking them. And that's just, how do I feel at the moment? Across the board, physically, mentally. And that's a part of it. And then the other part of it is, on a scale of, what to whatever, 1 to 10, 1 to 100, whatever, how does this particular setup rate based on what I've seen today? And right now, this is a really crappy place to trade, but it's a really tight range. And the really good places to trade have been the extremes at the edges of the profile. So, this, like I said, every time we get significantly far away from the VWAP, we have had sweeps toward it, which again, I think it's unusual that you see that, but I think it's noteworthy because it just shows that there is an organization underneath this chaos. The institutions are still trading. They're just trading ES like NQ. So anyway, and it's not by any means a trading signal at all. It's just it's a backward looking metric that is just confirming what I'm thinking the conditions are telling me. So okay, I see it looks like everybody here. We're past the start time, so let's get started. All right, again, I've just been babbling. I opened the room up early. We're watching this kind of range play out with all these big sweeps. And here's what we're going to do. The first thing we're going to do is go through the quiz because that's pertinent to the topic today. And then after we do the going through the quiz, we are going to look at the range here and see if, we have the initial balance is perfectly formed. We're trading nicely around it. The initial balance high and low here are my blue lines. And, but it's very sweepy and wicky. This is a 1 minute chart. Look at all the wicks on this thing. They're everywhere. And what does that tell you? Well, it tells you anytime we deviate at all from any volume, we get to the extremes, the volume gets really light and then it reverses instantly. That's what that's saying. It's just not doing it in any predictable spots. So you have to be really dialed into the short term. Even a minute is too slow to see what's going on. The 15-second is telegraphing it really nicely. But again, you can't wait for things to, say, well, if I see this or that, I'm going to trade it. You kind of have to have a plan at the extremes. And if it comes to you, take your plan like it did down here. That was a really nice spot to get long down there. And, it's just why? Not so much because, well, it's definitely going to reverse. It was a great spot to get long because if I was wrong, instantly I would have known it. And so I just, put a 5 lot on in increments there and took it off way too early, but I took it off at 30, but hey, that's fine. Really nice little trade. That's the kind of things as a scalper you want to look for. You don't want to get too dialed into the overall structure. It's good context, but on these kinds of days where there's all this motion, it's just, it's going to run you over. Okay, now we might have another setup here. Let's see if we can get a trade off. This looks like a decent spot it pushes through here. Maybe we can sell this up here. I'm tempted to try that right now. Let's see. It's going to go higher, I think, here, but that would have been a good spot to hit the market short right there at 55, which is my initial idea. I'm being so conservative in front of you guys. I don't know what that's about. I normally would have taken that trade wholeheartedly. But anyway, I'm not shy either. I guess I'm trying to demonstrate good techniques and trading this kind of craziness with some conservativeness. That's what I guess I'm trying to demonstrate. This looks like it's going to puke up now, but the first time it tapped 55, it was perfect short, but it's coming back up so quick. I have a feeling we're going to puke up through maybe 59, maybe even through the high, and that could set up a very interesting trade. And here it goes. Okay, we got to 57. Yeah, I think we're going to puke this level. So let's see if we can fade that somewhere. And there it goes. Okay, so this is the spot to try it. See if we can grab 2 points here. And I may have to scale into this idea, and I may be off sides real fast too. So now I'm being less conservative because this is a decent idea. I wanted to show it to you guys. There's a little bit of lag there. Now I've got 2, and we were right at the spot I thought we'd get to. Okay, let's see if we can now make some money when it pulls back in. Okay. And it still wants to go up, I think, here, but I think I'm going to get filled on my targets, at least a couple of them. Let's do 2 fast. And then 58 should still be in play. I'll come back to what I was going to do in a minute here. This is a really good opportunity for this trade, so I want to take it. Okay, now it's going to work here, I think. Come on, we should get a push right into our orders if I'm reading this right. So I'm short 63 quarter. I've got orders at 61.75 and 62 quarter, which might be a little low. And then I'm leaving 1 here just in case it really pushes down hard. I'll get a fill maybe at 59 and a quarter, but it's still going up. So very volatile. Okay, here we go. Come on. Give me the traction. Here we go. Okay, there's 2 of them. And there's the third one. Awesome. Okay, so that 3 lot with micros made $35. We had an MAE of 23, which is because I scaled into it. We were in that trade for 1 minute. So that was a perfect example of, when you see something happening and there's going to be a break of a ledge like that, unless it's just going to break and run, which, the odds that we're going to get a trend day up today are overwhelmingly low. And you're going to get a pullback, so that's a decent kind of place to scalp. But again, that's counter trend, and you have to be prepared to scale. If you just tried that with like 1 ES, you would have gotten way too far off sides to manage the trade. And I was prepared to go up to 10 micros there, and I think the max I had was 3. Yeah. So anyway, that was a good example of how you could play something like that and make some money without taking a lot of risk. Anyway, let's go to what I wanted to start with, which is the little quiz here. And let's make this bigger first. Okay, so I'm going to just keep this running over here and keep one of my eyeballs on it because I think we might get another blow through here. And here it comes. And that could set up another good trade, but it's going to be higher up. It could be as high up as 75 now. There's, a lot of shorts are off sides here. So I still think 4,400 could be in play today. I've thought that all day, but I'm not going to be long to get up there. I'm just thinking if it does get up there, that's going to be a very interesting place to sell really hard. Anyway, this is going to continue to distract me, but I'm going to try not to. So let's go over to the question and let me post what I said. So I just woke up. I grabbed a few scalps. That was it just before 2:00 in the morning here, and I was sipping my coffee, and I said, "Oh, this is just too good." And by the way, look what I did here. I started out with a mini because the conditions were relatively quiet, and I made it, $25, $12, 25, 2 ticks, 1 tick, and then I realized that it started to move around a little more, and so I started going into more micros instead. So instead of 1 ES, I did 5 micros, and I made a lot more money on the trade because I was able to scale into it. So that's one reason I posted that, and I was curious if anybody would notice that. Because it was subtle, but it was important. All right. So my question was, why was this a good spot to play? And I was very non-specific about what I was talking about intentionally, because I wanted to just see what kind of responses you guys gave me. So that's why I said, if somebody gets this perfectly right with the 3 key things, I'll give a gift card away. And if not, I just love to hear the answers. There's, maybe 5 good reasons why you could do this trade. And I wanted to hear, what they are. And if somebody nailed all or most of them, then that would be a good winning answer. So this was the thing that I posted. That was the first part of that. And again, I'm going to go through the answers first, and then we'll look at some of this stuff, because I don't want to give you the answer right away. I want it to be interesting and informative. So you know what? I'm going to cover up the price action for a while. We won't watch the market because it's pushing up anyway. It's almost at that 77, 75 area that I was watching. This is too big. Hang on a second. I've got so many windows. I have to be careful which ones I'm dragging around. Okay, so that's the image I was talking about. And then I said, what happened here? Why do you think it did this? And then I said, this was not required for gift card contest. You know what? Let's focus on this project for right now. We can come back to the market anytime. Okay, so that's the first image right there. And whoops, if I make it too big, it's scaling the same as the other ones. Let's do that. Okay, and then this is the second image. And I'm just going to bring that over. I'm trying to scale these. Just give me a second, because Windows wants to scale them all the same way, and that's going to be a little harder. Okay, so that's the first one. Then that's the second one. And then this was just the 15-second version of all the same stuff. And that will be useful after we talk about it. So, okay. So now that's the stuff. And the first one I put up was this one. So let's start with this one right here and just look at this. Okay, so CK was first. Thank you for stepping up, CK. And let's read what he said, and then let's look at it. Good scalpable range. Okay, that definitely was clear that we had a range that it was definitely playing in. And you know what? This will be really useful to watch the 15 seconds. So, we had a big burst up, and that was what got us up in here. But prior to that, we were trading pretty predictably, and that's what we were looking at over here. So let's stay focused on that. Okay. This price, you can see that's 35 and long white bar. Okay, the long white bar was liquidity, and what that was this is the big sell-off that pushed us down, and you can see it traded right. And if that white bar was back there, that means that liquidity existed even when we went down. This is showing history of liquidity. So we came up into it, and you could see that. What does that mean? Well, there were people looking to sell there, and the blue means that they were getting that everybody buying, the trades were going by on the ask. So somebody was absorbing every single one of the buyers here. And this is really important to understand. That's what was happening right here. And so motivated passive buyers at extreme absorbing the selling action. You almost had most of that. Slightly off, but you were close. Do you understand why, CK? Let me know. I'm going to go on through other ones. As CK stated, Jose says, clearly defined range with liquidity above and below price. Yes. And you can see the liquidity down here too. It's not quite as thick, but there was definitely liquidity. And particularly once the price formed a low, notice how up to that point it was light, and then the liquidity formed. As soon as it started to hold a price, the liquidity formed up underneath it. And this is something that I've seen in the past. The last time I really was aggressively using liquidity maps like this was in 2018. And the conditions were kind of similar then, actually. And I remember that when I saw that, I was just jumping in with that when I saw it. And it's a really good way to game a high volume reversal if you see that happening. So remember, the high volume reversal criteria are real simple. HMOMO stops and then the delta rolls over. Well, this would have happened right after that, or right as that was happening. So it would have been a good kind of additional clue, but I wouldn't just trade off that, because oftentimes liquidity acts as a magnet and we continue down. It's just giving you an idea that there's people are stepping up to buy there. Okay, so let's see the rest of what Jose said. Renewal of the bids below price move within the range, sitting passive sellers above. Don't worry, iceberg is the wrong word there. Don't worry about icebergs. Iceberg is a very specific tactic for a seller. They can be passively selling, and they may or may not be iceberging. Iceberging is when they're not showing all of the order they want to sell. And the platform people love to talk about icebergs as features in their software. I'm here to tell you they're completely useless. It's not an edge. If you're just watching the traded volume, you'll see what's happening, whether there's an iceberg there or not, that a seller keeps stepping up. It might not be the same seller. So that was a really good answer, but and I know that the iceberg thing is taught all over the internet, but I strongly recommend you disregard that idea and just think of it as what you said: sitting passive sellers. Forget that they're icebergs or not. That doesn't matter, and that's just a really easy thing to get confused by. Okay, Brent said, this is a well-defined range with little to no momentum up or down, indicating a breakout of the range either side is unlikely. Yep, that was a good point. Prices ebb and flow, good conditions for scalping. Yeah, that was the overall. We would have these big pushes, and then we get into a range, and the edges of the range were real precise. Again, look at what happened at the next low. We pushed through the old low, and you could see the liquidity was there. See, and we traded through it. So that old liquidity stepped back up when we came down to it, and it traded right through it. But this is interesting. So remember, these big dots are traded volume. This was traded volume on the ask side, which is why that's so blue, and that's a passive what? That's somebody selling to everybody buying. So it looks like it's blue, but that's that example where they're absorbing buyers. And so you can end up misreading that. As we traded away from it, it was really clear that's what happened. And then we came down here, and then it's the opposite. The blue down here means the opposite. And there was a really good reason. And I was curious if anybody would bring this one up. They didn't, I don't think. Maybe I missed it. When we go through the rest of the answers, we'll see. But what happened here is buyers stepped up, and then the ask got lifted, and that's what got the market moving up. They were able to lift the price. Over here, they sucked up all the buyers, and the price never got lifted, which is why we pushed down. That's a key point. This is absorption of buyers, and this is buyers that are actually going in the buy direction, and these are people either wanting to get short or just taking positions off. So it's an important distinction, and I was curious if anybody would catch that. So. Okay, Joel, good answer. Please don't private message me on these things, though. And I haven't said this before, so it's no big deal, but it's just I want everyone to see all the answers. So please post them publicly when we do stuff like this. Anyway, Joel said, direction range bound, good. Momentum reactive to the downside and adequate to scalp ticks from the inflection point. Excellent. You nailed that there was the big liquidity there at 35. Okay. High volume reversal. Yes, we had a beautiful high volume reversal. Nice low volume retest. Both rejections coincided with an order book flip. That is true as well. At this level of blow up, we can't see that. But if I unblow it up, if you look at the bottom of this, it makes the text small too, because I've got two windows running here. But you're absolutely correct. That was one of the tells of this whole thing. In fact, I'm glad you brought that one up, because that was one of the ones I was looking for. Notice, when we came down, that big push down that ended right here, look what happened. Liquidity stepped up. See how white it got suddenly? And look what else happened right there. The flip book rolled over. So if you were watching the deltas as it was trading, not only was that happening, but people were stepping up their buy orders, and the ask was getting lifted, and that's what that looks like. That's why it turns blue. That's bullish for price movement. That's what this flip chart does. And then when we got up at the top, it was the same kind of thing. It's all selling. Trades are all going by on the sell side. So it's really clear that this was, they were absorbing buyers there. That passive was happy to sell to those people and then push down. And then look what happened at the next push down. When we teased coming down here a little bit, and then we actually got to the level that we had traded off of right there, right? And we traded right through all that liquidity. It stepped back up and we traded right through it. But it was one of those things where if you were just a little patient, it still was a good signal. The buyers stepped up. They just let it trade through, and then they stepped up even stronger. And again, you could see that when the delta rolled over and the volume picked up, which again, that's classic signs of a high volume reversal. And that was a beautiful one. And look where it went to. It went right back to exactly the same spot of liquidity. So if you didn't overthink this and just traded what it was telling you was happening, it would have been almost perfect. We don't get signals this clear very often. That's why I posted it. I'm sitting here drinking my coffee and I'm going, either I'm still half asleep and this looks much more interesting than than it really is, or this was a perfect setup to show the class. So that's why I posted that. And anyway, so let me go back and with the answers. So whoops. See, now I have to zoom in again, and that's going to ruin my picture over there. Okay, so continuing with what Joel said, low risk component is because we have clear inflection point, allowing for defined small risk and the knowledge that once broken, we're wrong, we can exit immediately. Yes. So you nailed most of it, Joel. You got really close on that answer. So very, very good job. Wasn't quite the gift card answer, but very close. I was tempted. But then I read some of the other answers and I realized, okay, no, it wasn't quite exactly right. So anyway, excellent answers. Okay, Heidi. Also good answers. First shot, passive sellers came in holding 35, buyers keep coming in at 29. Everything we've just talked about. Yes, you got all that right. And by the way, my drawings are in the wrong place now, so let me do that. Okay, so that was correct. Second picture, we haven't quite got to that yet, but you got that correct also, which was this one over here. And passive sellers at 35 stepped aside, or they were done, Whoops, that didn't mean that to happen. Hold on here. Oh, I see it. Rejoined the other window. Okay, sorry about that. Let's just minimize that one. Okay, then we can look at this one. Okay, and yeah, it tried to do the same thing again. They got absorbed for a while, and then what happened right after that? Exactly, you nailed it. They puked. And boy, was that a beautiful puke, and you could see it coming. Look at the liquidity. After all of that trading, we look at the difference between this. We were in ebb and flow, and we kept tapping our way into that liquidity and sucking it up. And once we absorbed it all, it was a perfect long, as contrasted the perfect short of the other one. Your answer was perfect on this because, let me get the other window up. There it is. So, friggin' windows. All right, let's see. That's not the one we want. We want this one. Okay. Just get the edge of that dragged up. Okay, so this was, really successfully absorbed. And look at the difference. We came up and it's like a V. We turned immediately. So really clear that the sellers that were absorbing everybody buying there were really strong and they were going to hold that spot. And there was even a little tease back up to it and it continued getting sold and then got crushed through that liquidity. Then it got bought really aggressively. This was so perfect. And then you nailed it. Heidi, we tested that spot, we pulled back a little bit, and then in my second picture, look at that. We came back up to it, and so let's minimize this one again, and let's just make this a little bigger. So, and then we went into ebb and flow right there, as opposed to the previous behaviors that were high volume reversals. And as soon as you could see the liquidity coming up underneath it, because everyone's like, this is going to puke, this is going to puke. You could just see people getting ready to get long or getting long. And then as soon as it went, this is 5 seconds that it took us to go from 35 to the next quarter, surprise, 37 and a half. And then we plowed right through that and we got to 40 the next quarter. And then we started seeing sellers jump in, but then they got run over and then they jumped in again and they brought it back down there and then boom, right back down to the range we were in. So that was a perfect example. And yes, that was one of the answers I was looking for was that. On the second picture, that liquidity that had been so strong here at 35 was a classic place to trade the puke. And again, if you guys just get in the habit of looking for that single setup where we have previous level that's been really aggressively bought or sold, and we're ebb and flowing on it, and liquidity's helping the story, you have virtually a tick or 2 ticks of MAE risk. And if it pukes are always dramatic. They always are really, really great places because you're going to get 4 ticks. You're probably going to get 4 points, but you'll at least get a good trade. So I wanted to emphasize that. Okay, John. Excellent approach, by the way. John took the kind of step-by-step as things were happening, and some of you did that as well, but he did it with the most detail. So let's read what he wrote. This is the first picture. So pick one, starting with the break at 35. Okay, this occurred as volume increased. Sellers took control from buyers, exactly, despite the bids being added and offers being pulled. Liquidity at 35 saw buyers going away and trading became range bound as diminished pulling and stacking volume. Yes, the low of the range was established at 20, exactly. Volume increased, strong buying established the low, exactly. So basically you nailed the sequence really good and you got all the delta pieces. So that's good. Now the next one broke out of the ebb and flow, exactly. The buyers took control. We traded into that range. You nailed all of this. That's exactly what we were just talking about. Then again, number 5, you got that absolutely right about what happened up at the 43 area, which I was talking about a second ago, and the picture disappeared. Here we go, up in here. Exactly. That's exactly the right way to read that. And then the volume diminished and liquidity stepped up and we sold off. So absolutely right. Back down to 37. And this should just be reinforcement, guys. Notice how it doesn't matter whether it's nighttime or daytime, whether it's the open, whatever. Even if it's just for a couple of seconds, we always respect these quarters, 0, 0, 2.5, 5, 7.5, and 0, 0 again. It's not something, you can't use it as an indicator, but it can sure keep you focused on the next target or the next level above or below you. And that's really useful. So a number of you are noticing that, and I just want to keep repeating that. So good answer, good sequence. You're seeing how things happen, and that's really, really powerful. Okay, and then last answer, Sean said trading ebb and flow, absolutely. Within a range, trading the edges of the range, absolutely. Going with the price movement, absolutely. And the only thing you didn't go into the detail there, but you're seeing what's happening, and that's what happens. You start out just seeing the action, the ebb and the flow, and the movement, and then when you start watching the traded volume, start watching the liquidity, it starts making sense. You say, okay, I get it. I see, I'm seeing the auction happen. So all good answers. Unfortunately, nobody got the perfect set of 3 things. And I was looking for what most of you got and the puke all together. So you got really close, Heidi. You got really close, Joel. You got really close, John. You guys all had 2 of the 3, and I was really tempted. So anyway, but I decided to keep it official and not stretch what I was trying to do. So I think that was a real good learning experience. Let's put the dome back up over here and the traded volume and the liquidity. And okay, so what I want to do the rest of this session, the primary idea of what I want to talk about today is how you can use the initial balance as a way to kind of understand where we are in the day. So the initial balance on my views is always blue lines, the blue horizontal lines. So we are trading above the first hour high, and we are doing it across all 4 of the indexes, and they're all, kind of holding it. So one of the things that you can do on days like this, typically anytime we're around that number, and surprise, surprise, that number's 35. Well, 35 has been in play all night. The example, the quiz was about 35. So that's a really interesting spot to play. It's over and over defined itself as an inflection point. So this is the primary thing I wanted to point out when I scheduled this session before all this volatility started. I scheduled this 3 or 4 weeks ago. Actually, it's 2 months ago now. So, and I had planned, I figured by this point in the day on a Wednesday, it would be pretty quiet. Well, it's not, but you can see how that's respected. That's my point. So, for example, we established the first hour high right here, and then we established the first hour low right before it, which is really unusual, but we haven't broken it until we came back up, and then we broke it right immediately. That's the one we saw with Lee. And then look what happened. We traded right back to 40, and you could see that was kind of an inflection point. And since then, we've been above it, and we're holding above it. And this is noteworthy. On my 1 minute, it switched back and forth a few times, but I always like to see, what are the people that are on 5-minute candlesticks trading the trends seeing? Well, right now they're seeing a trend day, and that might be true. We have all the setups for a trend day. As long as we stay above the first hour high, we should probably continue going up, as long as no bad news hits. And we said all along, we said it in the session with Lee, 4,400 probably is in play sometime soon, if not today. We are look at the TPO views. We've broken out of the apex and we're challenging the top of it. So it's reasonable to assume we could retest that high if we can get anywhere near there and get any momentum heading that way. So so that's something just to be aware of. But I don't trade 5-minute candlesticks, and I think it's kind of silly too because they're so inaccurate. But that gives us a sense of that, there is a nascent trend underneath this market. So from that point of view, watching the initial balance can be really powerful, because anytime it comes down to test it is a reasonable time to assume, that there's going to be action. Whether it holds or not, we never know, but that's worth watching. Okay. And particularly if you Add to that the LRC range, which is the very fast range. Remember, initial balance range is the structural range of the first hour, right? And the LRC range is the right now range of the 15 seconds. And so one is a very, very fast look at range, and the other is a more session view of the range. And if we look at both of those, that can often give us a good clue of what's going on at an inflection point. Like right now, we're breaking the top of the LRC. We're also almost at the top of the ledge here, the top of the session. The odds are really good we're going to go through there. Maybe not on this push, but we're above the high volume node. Now the odds are 99% that we're going to go through it because we're within 6-8 ticks, and boom, we've traded one above. Let's see if we can do that again. This should break. I think this is going to go. I'm not going to go with it, but it should break. Yep, there's another 1 tick break. There we go. There's a 5 tick break. That's a perfect example, by the way, of the ledge break setup. Real quickly, let me just go back to that. As a way of just so you really reference these. They're meant to be simple, but they're accurate. And so set up bullet points, ledge break, okay? No high volume node between current price and ledge. Ledge was up here, the high volume node's way below us at 70. Check. Okay, going toward the ledge. Yep, we were. Within 8 to 12 ticks. Yeah, we were. Okay, so that was your 99%. That's why it broke, because that's my rule, so it has to break. No, I'm kidding. But you get my point. That setup works all the time. And you could have traded that long. I'm just, teaching at the moment. And one reason not to trade that long today would be we've had such wicked down sweeps. And, but your odds would still be good. You could have made some good money on that if you weren't greedy and you took profits fast. On days like this, I prefer to let the ledge break and then try to short it when we get a high volume reversal. And we got that too. So you could have played those both either way. And so that's what that looked like. We came up, we broke the ledge. There was a wick, could have shorted instantly, and you could have caught, 4 or 5 points. But you got to be nimble if you're doing that, and you got to remember you're temporarily counter trend, and that's very dangerous if the high goes again. You can end up really offside. So if you're going to short those, make sure you short after a ledge breaks. Don't short before ledge breaks. Let it really break, and then you want to see the volume profile. Do this. And what do I mean by this? Look what happened to the volume. Here's our high volume node. Remember, we had to be above that. Here's where the ledge broke from right here. You can see that's the beginning of the ledge break. And then look what happened to the volume. It went from real big down to nothing. Guess what? Exhaustion. That's what it looks like if you're not looking at a footprint. If you're looking at a footprint, you'd see, it just ran out of gas up there. And let's do that. Let's look at a footprint. So all this is the same data, but it's occurring in different buckets, and it's useful for different things at different times and in different trade setups. Like I'm not watching this at all, but I can tell you what it says because I just watched a trade. There's my nice clean top. Yeah, it could be a little cleaner, but it definitely ran out of gas. There wasn't a price rejector, but there was definitely exhaustion. And now we have a zero print down there, and so continues to be pretty crazy. Okay, so any questions so far about any of that, the quiz or what I was just talking about as that ledge break went? Any questions on any of that stuff? Because that's really powerful stuff. You can literally trade just those setups for a living. As long as you just really practice a lot, you learn where you're wrong. Here's another one. We're getting it again here. Okay, we're going to grab, whoa, I have already, protecting this. I'm already like 5 points ahead here. Okay, that was a 4-point winner. It just happened really fast, and you might have missed it. Go back and watch the recording. And also, there's a little bit of a lag now in the market. I'm seeing that this is rhythmic. This is rhythmic sim over here that we're seeing without the liquidity, and this is real money over here. So I'm watching them both, and this is MES, but I'm trying to see if there's any lag in the rhythmic because people have been complaining about rhythmic lag, and there was right there a little bit. Rhythmic was a touch behind. My trade copier filled at 2 different prices, and the real money filled at one price, and the sim filled at a different price. So that doesn't surprise me. So that's also a good warning to kind of stay out of the market for a while here. That there's been some data problems across the board, and since I'm copying this both in real money and in an eval, I'm gonna sit on my hands a bit and see if that particular problem goes away. But that's anytime you have a problem with fills or data or your platforms, stop trading real money. And if you're an eval or anything like that, stop trading anything but a sim, because it can just screw up your day really, for no good reason. It's not worth it. So as much as I like trading this both ways right now, I'm not going to trade it at all because there does seem to be a little bit of a data issue here. There's certainly a distinction between what Rhythmic Sim is providing and what Rhythmic Real Money is providing. They're slightly different right now. And what you can do when that's happening, if you want to pass an eval, is use the Real Money to game the eval. And I was doing that earlier this morning, but I'm not doing it now. Okay. So, so remember what I was saying about, as long as the initial balance holds, we often get a trend day. Well, in fact, we now have a trend day. So it would be a really hard one to play long because of the sweeps down. Like we just had a wicked sweep down right there from 86.5 to 83. But you could certainly be playing this long or short. There's perfect setups both ways. Again, it's my personal technique to try to counter trend trade these kinds of conditions. And I'm doing that, again, just to be really clear, because the sweeps have overwhelmingly been down. And that's just, I'm just playing the odds that if I get swept, it'll be in my favor. That's all. I'm not saying the long trades aren't good. They are. There's lots of good long ledge breaks, or, you go with a ledge break. Okay, I need to take a little break here. I'm stuck in my throat. I'm not going to be able to talk. So why don't we, let's see, what time is it? It is 8:30. All right, yeah, let's take a break for like a good 5 or 10 minutes. So, stretch, we've had a bunch of long, we had Lee's session and now mine, and I've been working and talking for a couple of hours here. So, and I know the pits and the live activities have been busy, so everybody probably needs a break. So break till, let's make it till, let me say 8:40. That'll be like 6 minutes or so. So 8:40 my time. I will be on break. I might come back if I see something crazy happening, but I'm going to go run my stairs and stretch and try to get my old body a little bit more comfortable right now. My chronic pain issues are bugging me, but I can usually make that go away if I just move around. So I'll be back in a few. Watch the action here. Be very careful of the data feeds, particularly in the sims, and the evals right now. They're a little funky. And if there's any questions, comments, put them in the chat, and as soon as we get back from break, we'll talk to him. Okay, I'm back a little early. Wow, look at that push down. It's a Head and Shoulders. Right back into the high volume node. How about that? Surprise, surprise. Right back to the high volume node. What a shocker. And the VWAP's all the way down at 48 now, though, so I wouldn't be shocked if we had another push at some point. This pattern, we see it over and over again. The liquidity gets sucked up, and then everyone says, okay, time to sell. Mind-boggling. Gotta love it. Shampoo trade, exactly. Wash, rinse, repeat. That is what it is. You just have to be so nimble, and you really have got to respect whatever range at the moment it's building. This was a really good example here. And again, if you combine the session, ranges with the initial balance, and then you look at the short-term ranges, the LRC ranges, and the liquidity and the supply and demand, right? I mean, it telegraphed perfectly that it was going to at least try to hold that spot, and sure enough, liquidity stepped up there, and it's a coincidence that that's the LRC range there, but it's not. The math is just saying, well, here's the best fit of the data, for whatever it's worth, and it's actually worth something. Which, it's really important to understand that's not an indicator, though. That it's telling you what's going on. You have to decide what it's telling you, though, and that's the difference between real trading and the furu bullshit that you get when you buy an indicator for $5,000 that's supposed to give you signals. Okay, let's talk about the interaction of these two things in a little more detail. Although it's happening right now again. Look how the liquidity has all of a sudden stepped up underneath us. See, when we came down, it wasn't there except at the lowest level. That was there, and then this one was there and stepped up. But now look, since we've started moving up, see how it's kind of flashing white? People are kind of stepping up, but not aggressively. So the range is kind of running out of gas. And the next liquidities above us, could act as magnets, but that's the range for the moment. Look at where, they stepped up down there, and look where they stepped up here. And we've got a really big range. And look at the LRCs, they're defining it pretty clearly. High is about 85, the low is about 70. And that's a really, really pretty situation. But it's so NQ-like to do that. ES normally doesn't trade this way. This is a critical point. So if you can trade this when it's doing this, when it's quieter, it'll be much easier because it's more predictable. Ranges are much more predictable. But if you're dialing in on what's happening here and you're seeing what I'm talking about, it's really powerful. This will make you so good at reading it when we come back down. You have to give it a lot of room, though. Don't marry prices. Look at and constantly be reevaluating that range, which is why having it plotted somewhere is really useful. And the other thing I want to show you guys here with respect to this is, we do have this trend day still going on here, and all we're doing right now is pulling back off of the high, so the potential to continue going up is still there. There's definitely more long trades here. You just have to decide where to do them. Don't try to get really big trades. Don't say, well, I'm going to go from inside out, from the high volume node to the high. Don't think that way. Think in terms of stuff like ledge breaks. Like as we start getting close, the odds get really good so that you can scale into and take the trade. But if you're taking it from all the way down here, yeah, you might be getting more potential, but you've got to take so much risk to make that work that you never know whether it's going to work or not. Whereas, that ledge break trade, once the criteria is set up, it always works. So you just have to, be really patient. And Lee and I have been saying this over and over again for the last few days. There are really good trades out there under these conditions. But if you're thinking too much, if you're over trading, if you're not being patient, you can really blow up an account. The moves away from levels and through levels have been so aggressive. So respect that. Okay, so again, in the title of this session, there was a really good clue about, about the kind of central point I'm trying to make here. Initial balance has a range, edge, and ledge breaks. Okay, so let's go back to that for just a second. We know the initial balance, that's our blues over here. Our short-term ranges are the LRCs right now, and you can use the longer one. The short one is just, what's going on within the range. But the one I'm using to measure that is the one on the outside on either one of the views that you're looking at. So we have this, in all cases, we're trading above the first hour. That's reasonably bullish stuff. The volume pattern on Globex is what I've got here. And, there's a big high volume node below us and a couple of big high volume nodes, and we're on one of them and there's one above us. So the Globex pattern is a little sloppy to read. But as we pointed out during Lee's session as well, if you look at just the session, there's actually a sort of double distribution there. Let me just crunch this together. And so remember this on my views, here, we can't see it until we rescale it. Hold on. Okay, so this is the session over here, and this is the overnight. And so on this view, they're broken up. And so if you kind of add all that together, you could see what I was seeing on Globex as this giant high volume node of the two. But we're on this one on the regular trading hours. So it's a double distribution, but as long as we stay up here, every time we start going up, there's really good chances the ledges are going to go. We've got price rejectors on all the rotations down. So this is notable. Again, there are signals in both directions, but they're not disagreeing with each other. What they're doing is they're telling you that the ranges are just too big and too far apart to predictably play one way or the other, even though we are going one way or the other fairly predictably. So let me clarify what I mean by that. Remember when I was talking yesterday about ranges, and I said, the thing you're really looking for is you want to have, if this is the session, you want to have whatever you're doing be a really small piece of it, like the LRCs are really tight together and the session's big. So right now, LRC is 75 by 66. So call it 9 points, okay? And the entire session is 100. That's good. In other words, where we are right now, which is kind of like right here, is about 10% of the entire piece, of the entire range, this part here. That's good. That means this is a real predictable spot to play from, because we're either going to stay in there, which is really unlikely, or we're going to go up here, or we're going to go back down here. This is a really small place. So when it leaves it, it's really obvious, and you can play that aggression. That's my point. And that's why the ledge breaks are such good trades too, because we are forming the ranges right up at the high or the low. And this is what, if you were in Lee's session, I bought that low down there because we came down really hard, and then we formed an ebb and flow right at the low. And even though the structure said there was unfinished business and we were going low, from a price action point of view, it was a great low risk long, because you're wrong here and it went back up here. So it was like, why not take that? That's the price action view. So this is the crux of this idea of relative ranges. And it's really important to keep it in mind. There's no magic math to it. There's no magic, correct ratios or anything like that. It's just a matter of being aware that, look, your edges in this style of trading depend on short-term ranges, the quarters, the liquidity. And if liquidity is getting really aggressively absorbed at one end or the other, that you're going to get pukes, because pukes are classic price action behavior. When a level just holds and holds and holds, and then everybody says, screw it, and we puke. That's what happened. And so those are really the primary tools here. So if you can really get used to just, okay, what's the range right now? Let's look at it. The bottom of the range got bought perfectly. And, so what's going on now? We're right on the high volume node. And now, we're back in the middle. So this is the perfect definition of value right here. We're right on a high volume node, and we're right in the middle of the LRC range. And there's supply above us and demand below us. And so this is a tradable range if you see a good setup. The reason I don't like it right here is because there's no good spot to lean on. I like to lean somewhere. So that's like the next phase, maybe a structural spot, like what's going on structurally. Let's see. Wow, this is a mess. There's matching min deltas that are in two places on the footprint, and then max deltas above us. So you could assume sellers are in control, but it's a really big range from the passive sellers to the passive buyers who were just below right now. So the sellers are taking their foot off the gas. We probably will move back into the range here and move up from here. This might not be a bad spot to scalp long, but it's risky again because it's a sloppy day and the sweep's down. So for that reason, I don't like this range. I want to let it come to an extreme of the range, and then I'll consider playing. So that's my kind of quick assessment of all those factors. Does everybody get what I just said? Are there any questions about what I just said? See, and we're going up. So, my assessment's correct. That was a decent spot to play long, but I just wasn't willing to take the risk of a down sweep to a better spot to play long. That's all, and that decision, if I was doing that a month ago, I would have gotten long in a second. Really definable spot in the range. The buyers are stepping up, by all means, play it. But on a day like this, with conditions like this, you've got to be much more sensitive. All right, now we're at the top of the range again, 75. What could happen from here? Well, we're right on the min delta, so we're right on where the passives are. That doesn't tell us anything. Let's see what's going on with respect to the session range. Well, look at that. This is what you're looking for. NQ tapped the first hour high, the IB high, and then started going up again. So that is reinforcement that there's a bid under the market and the initial balances are good spots to play. If you're trading NQ on a normal day, that's a great place to buy it and go long. But again, under these conditions, I'd rather trade ES, and I wouldn't try a trade like that in NQ. But it's a predictable setup. Same thing here in RTY. It tested and held the first hour high. And it didn't get as close, but so did YM. So far, all four indexes are saying the same story, that good pushes down are good longs. But, you got to be really picky about where you try it. So this might be a good spot again now. That's the shampoo idea. It's holding this area, but you're vulnerable to a sweep down to 65, 67. So that's a better spot. Let's see if we get that, and we'll buy that. So, I would buy like right here. See if it sweeps down to us. That'll be almost a perfect example. Liquidity's a little higher up. Let's go up here. So and I'm on the quarter. So if it sweeps down to the quarter and I get filled, the liquidity is there. It's a low risk trade. If it works, great. I'll probably get 4, 5, 6 ticks, maybe even more. I don't have a bracket and I don't have a target. And that's the next question I'm going to answer. Somebody asked me if I use targets or brackets at all. And particularly when I'm trade copying, the answer is no. Okay, I'm filled now. Let's just see what we can get out of this. That's 2 points. Let's see if I can get that. And I'm going to be ready to move my order real fast. Boom. All right. We just made 2 points in 1 second with an MAE of zero, $10 in 1 micro. You can do that all day, and you can do it with 10 micros. You can do it, those scale perfectly. But does everybody see what I just did? I told you I was going to do, I did it, and then we made money with it. Let's debrief it. Does anybody not understand that trade? And why that was such a good odds? We're still in the range. The range hasn't changed. It's just, volatile, moving back and forth. So that was a good idea. Let it push down, sweep down to me, and I'll grab along at the edge of the range. And if I'm wrong, I'll know it, and I'll lose 2-3 ticks. Instead, I made 8 ticks, and I made it in 1 second. No questions. Okay. Everyone gets that? Cool. Either you're all asleep or doing something else. What do you think, JVC? You think they're asleep? You're probably asleep too. Got it. Okay. Jose's got it.
I'm just muted.
Okay. That was a really important point. I'm just kind of, doesn't anybody want to say, I don't get it? Or, yeah, that's a really good example. If you just do what I just showed you, go back and just watch the replay of that. We just made 8 ticks in 1 second on a trade that I said, okay, here's what I'm going to do if this happens. It did it, and that happened. And yeah, if you do that once a day with 5 contracts, you could live off that. I mean, it's that simple if you don't overthink it. And what am I referring to? Let me pull this up again. Just if you want to reinforce something, this is what you should be reinforcing. Right here. Scalping is simple. Which way are we going with how much energy? That was the trade there. We came down and energy disappeared. So okay, that's a good spot to play. I identified an inflection point. The energy changed. It came down and then it went away. So, okay, a good entry is right below that. Let's let that puke. It did. And right to the inflection point. That was the whole idea. Let it come to the inflection point, which happened to be a quarter, which they often are, but that wasn't a coincidence, but that was just a good example, which is why I did the trade. And so, from that spot, the odds of getting, the ticks I want are just so high. And again, it's not so much that I have perfect knowledge that, God, you just do that over. It's that I'm doing it at places where if I'm wrong, it's so obvious and it's so little damage compared to what happens if I'm right. So it's this idea that's really important to understand between information risk and money risk. My information risk is high. I really don't know what's going on, but I'm trading a predictable pattern with very low money risk by playing the edge of the range like that. And here we are at the other end of the range again, and this looks like it might take out some shorts here and puke up again. It kind of has that feel to it. So I wouldn't just be shorting this up here. But again, if you can catch good inflection points when the ranges are holding, my sense right now, my spidey sense right now is that the range is going to go to the upside. We're going to break to the upside. But again, that's not based on any trading thing. That's just my feel right now. And for that reason, I would not be short here. I would be long or nothing, and I don't want to trade long into these sweeps. So that's why I wouldn't play the top of the range like I'm playing the bottom of the range right now. That's the only reason. And there it goes. There's the top of the range got burst and then it got sold again. But see how much more less definitive it is up there. It feels like it really wants to go when it gets up there. And I'm thinking, why? Well, look at the liquidity above it. Basically what I think we're seeing is when it pushes up, people want to sell into it, but they don't want to be the first guy to sell into a push up. They want it to push up to a good spot. And that's why we're seeing these big slams down off of liquidity that, it's like, everybody wants to sell. They're not shorting so much. I think they just want to sell here, which I would too, but they just don't want to be the first guy to do that. They want to be the last guy to do that, or they want to do that in the low volume node on the way up to the high volume node at 80, or they want to do it after a ledge break. It's the guys that are selling big blocks are being very, very particular about where they decide to do it. But when they do it, man, they're really decisive. And that almost sounds like, a complete contradiction, but it's really not. So all right, let's see. Good. All right, there's some comments and questions. This market's confusing you. All right. It's clear. I can see it, but I'm slow. Yeah, I get that, Heidi. And it's not that you're slow. It's you got to just over and over look for it, and then you get faster at seeing it. I used to be really slow at seeing this stuff. The more you look for it, the more you see it, and the faster you'll recognize it. Elias, use the low of the range as a spot to lean on where the previous long opportunity did not offer a good spot to know where you exactly that. And just don't think of that as automatically a place to be long. If we got back down to the edge of the range and I saw selling volume really pick up and the bid not stepping up, in other words, if the flip was getting really red as we came down and the liquidity wasn't stepping up, no way I'm going to take that edge of the range. I'm going to let it, for example, in this example, there's some demand back here at 60. So if the edge of the LRC at 67 goes, the next place that I'm interested is down there at 60. Not, I don't want to be the guy buying the low of the range when the range goes. And these are ranges based on 15-second bars. So they're very, very fast and they can change quickly. And that's why it's frequently useful to do what Surfer Guy does, which is this is his only chart. And it's useful. You basically have the price action with the volume and the delta, so you can really see which side of the tape it's on. You can see by the wave volume, the energy of each push up and down, and then the LRCs tell you the range right at the current moment, and not before it and not after it, and just right now. And so if you look at the interaction between the fast range and the slow range, when the fast range is accelerating up, typically we'll push the edge of the slow range a little bit, like we just did. We might not break it hard, we might hold it, but that's what accelerating trend looks like when the market's aggressively moving up or down, either way. Then again, this is something I pointed out before, but I want to emphasize. What happens is, like right now, we are seeing parallel. The fast and the slow are parallel. So what that means is that we're in a range that's really predictable. So that's where, that's the fast LRC and that's the slow LRC, more or less. It's not perfect, but you can see that roughly. Okay. And then if, on the other hand, what you're seeing over there is, here's the slow LRC and here's the fast LRC, guess what? You've got a trend up. Both the slow time frame and the fast time frame, which both are very fast time frames, they're just subsets of this 15 seconds. In the short-term movement is mirroring the longer-term movement, which means it's a perfect trend. That's as good as it gets. And then the sweet spot of using this as kind of a geometric indicator, and that's why I say I like the geometry of the slopes. The slope themselves don't matter, but the relationship to the slopes does. So for example, when we have the slower one look like this, and then the fast one does that, guess what? Perfect place to look for a counter trend short as that's happening, because it's telling you it's happening. It doesn't mean, get short at all costs, and it could, hit the spot and then go hard up. But it's telling you, at least for the short term, the movement up has diminished, and that's very valuable information. So if you incorporate all of these different pieces, we're looking at all different elements of the range, whether it's the first hour range that we're looking at over here on the 1 minute views, or it's this fast range, or it's the relationship between the two geometrically, or it's the relationship between the ranges we're seeing here on the liquidity map and the liquidity. Look at the liquidity up there forming up as it's coming up to it. And there's nobody down here. So a sweep down is really likely once we push up into that liquidity, because there's nobody to hold it. And so, we're going up, but it's a dangerous place to be long once you get up into that liquidity, because we've seen that happen to be a spot where there's big sweeps. So let's see if that's what happens here this time. I'm not going to trade it. Let's just watch it. And there it is. So that's what happens. These levels they eat up the liquidity, and then you get a push down. And now the liquidity is up here at 77. So, that's probably the next place we'll see that kind of behavior. Well, actually, we're still seeing it here. So it's actually increasing in the downside here. So it did see what it did there, though. It traded right up into the liquidity, pushed just past it, and then those guys stepped back up. There's nobody down here, so that's why we fell down. That was a really good example of it. And lo and behold, we're back at the other end of the range. And again, that's not a coincidence. That's what we're measuring, is just, give me a best fit mathematically of the range right now. And, so when we're at the boundaries, if there's supply up there and the price action says, yeah, that's a good spot, boom, take the trade. You're asymmetric, which means if you're wrong, you'll be wrong really fast. You can get out of the way, get used to being wrong. You got to practice being wrong. That's important too. Don't have an ego if you're going to try to trade this way, because it'll kill you. You can't, say, oh God, I'm sure this is right. I'm sure this is a short. The minute you start thinking like that, you're crushed. I almost jumped on Lee at his structural session this morning because he kept saying that he really liked that long idea as the price action was diminishing it. And I could see, I know he's busy doing some other things, and I could see he was a little distracted. And I knew if I pointed out to him, he'd realize that he really didn't feel that way about that it was kind of winding down. And but I decided to keep my mouth shut anyway. But we saw that at both ends. We saw it both at the high and the low. And this isn't a criticism of Lee of structure. It's just that's the conditions we have right now. It's if you stay really dialed in on these inflection points and how the liquidity is trading around them, and these short-term ranges within the context of these longer-term ranges, this is great stuff. Again, it's useful periodically to kind of zoom out and say, what are the trend traders seeing? Do they still see a trend here? I don't know. Let's see. I'm going to let this repaint. Okay. So if I'm a trend trader, this is a 5-minute candle view. I would say this is a long trend that's now consolidating at the highs and has every reason to continue. That's pretty clear. We have a trend day. It's a really hard one to trade, but it's one of the 15% trend day, assuming we don't totally reverse and close at the low. We have probably the cleanest trend day we've had in a week. Look at that. It's just sloppy as it's working its way up. So anyway. All right, let's see. We're at 9. Boy, look at it. And this is a classic example, too, of how, if you just get a little closer to the action, you can see, it's trended up on 5 minutes, but we're in ebb and flow right now. And so, that was actually a sweet short. And now it's probably not in anything because it's pretty quiet ebb and flow. Wicks on both sides, but the range is really small. So right now, again, just because of the sweeps, I would be short rather than long, but this could go either way. So I wouldn't really look for a good edge there. It's forming another little high volume node. Look at that. So this is an interesting little spot. Looks like it wants to push up and then get sold again. See how these guys start stepping up as we come up? That's so typical on these conditions. Push up here is likely to get sold. So, rather than being long here, I'd look for a good short entry. Maybe we puke these guys, 80. 79, 78, 3/4. Here we go. All right, there's the push. Let's see if we can get it. Here's the liquidity. Oh, I'm tempted to take it right here. I took the market on one there just to see if I could show you that. Yeah, here we go. So I think I'm about to get my first 3 or 4 ticks. Traded there. I didn't get them. Okay, tighten it up a bit and take the 3 ticks. I wanted to get 4. But notice how the liquidity got taken out and now it's above us. So we could push up again. That's why my orders up there are still good. This is a classic example of scaling into an idea. So I'm going to give you an example of that right now as we tease the top. And I'll take up to 10 on this. So I'm pretty happy with this action unless it really gets rocking and rolling up, in which case I'll just stop scaling into it for a minute and see what's happening and reassess my idea. Okay. I push that down so I could get a fill. I'm chasing it. I did not get a fill. The pressure is definitely on the downside, but let's see if we can, there we go. Okay, now we got that one. We can take the first one off right above the 75/4, which is ideal. That's perfect. So filled, now we can move the other one out of the way. We can protect it with a stop. And it got filled. So that's how you do that, guys. That was a perfect example of how to trade that and scale into it. And again, that could be 2 or 3 ES, and you could make your day on one trade like that. But under these conditions, I'd much rather go with the micros and do it all day. It's 10, 15, $20 at a time, and at the end of the day, you got a couple $100. And this particular account, as I said, I'm trading in real live money, but I'm also in an eval that's a 25K. So maximum 3 contracts ES, 30 minis or micros, and it's trailing drawdown. So again, I'm going to just look to keep adding to my profits, keep building up my equity curve, and not have any big losers. And I've been posting the trades. You're seeing all of them. Here's today. So we've had 0 losers, and we're up 238.75 in that one account, and that's copying to 2 other accounts. So multiply that times 3. Okay, let's see. Comments, questions, continuing. Tyler, how did you choose the inflection point other than it was a quarter? Okay, I just answered that since you asked that. Did you catch? There's a bunch of ways. Where the liquidity was, the LRCs, how it responds at the boundaries of the LRCs. Not so much that it's the LRC low, but that when we're coming down, the buyers are stepping up. And we've seen that over and over again, which is why this is kind of a very poor, long trending day. So that's the reason. Hopefully you got that. Okay, cool. All right, let's see. Elias says, so basically context for ideas and order flow for... You're so close, Elias. It's just don't use the word confirmation. I know that comes from the, you look for an idea and then, the idea confirms itself. That's very technical analysis, kind of furu-y. Order flow traders are more like you look for inflection points, you look for ideas, like you said, and then the order flow tells you what's happening at the inflection point. It helps you game your idea. But don't think of it in terms so much of as confirmation or lack of confirmation, because often when you're doing order flow, there's mixed signals. There's, one thing is telling you one thing and something else is saying, well, maybe that's true. So what you learn to do, instead of thinking in terms of signal and confirmation, what you do is you learn to think in terms of, I'm making a discretionary decision, so I'm constantly evaluating all the pieces and coming up with one solid answer. Do you understand the difference between those two things, Elias? That's critical. And I'm glad you asked that question. Do you get what I'm saying here? This is the difference between using a trading system with indicators and being a skilled discretionary order flow trader, what I just explained. Do you understand that answer? Perfect. Okay, thank you. All right. And that's why it's something that it's a learned skill, like we say over and over again, and you get good at it by practicing. It's not like there's some magic thing one day you say, oh, wow, I can do this now. Every Monday I am lousier at this than I was on Friday because I haven't done it for a day on Saturday or on Sunday, till the reopen. It is a learned skill. It's like anything, if you play golf or you drive Formula One or you race motocross, whatever it is you do, your body and your brain learn over time. And in so many ways you don't understand. I know many of you have read that book that I've recommended, The Hour Between the Dog and the Wolf, but it's about this. Read that book if you haven't read it already. I'll put up the title of it here and show you the cover. It's about how there's lots of stuff going on neurologically with us humans that we really don't understand, but that you can use to your advantage without understanding. So The Hour Between, I'm trying to type and I can't. There we go. This is the book. And I know a number of you have read it. I highly recommend it. Everybody that's read it recommends it too. So that's the book right there. And simple thing. Your brain's going to form associations by practicing that you won't even realize are there. And those things are part of another book that I highly recommend. We talk about a lot in TRG, which is Blink. Not Blink List. Hold on. Blink book. And this is just how, people that are really skilled at something, that have practiced something a lot, have really predictable ways of doing things. And people that haven't done it don't. And that's the power of thinking without thinking. So these are two really good books about how your body and your brain just kind of learn things that you don't realize. And that's really the key to getting good at this. Like, look at this example right here. It pushed down to the edge of the range. It exceeded the edge of the range. And then right here, look at this, the buyers stepped up and we went right back up into the range. And so that's the kind of thing that you're learning to look for. Like you said, when it gets down there, it's not so much confirmation. You're saying, okay, we're at the edge of the range. What's happening now? Well, sellers are there, but price didn't change. Look at all this selling and price wasn't changing. And when you see that, that's a clue that there's going to be at least a short-term puke the other way, because there's a lot of energy going into the price and it's not impacting it. And so that's an example of what absorption looks like, or exhaustion looks like, real time as it's happening, which is what we're trying to get you dialed in on. Okay. Thank you, Tyler. Appreciate it. Yeah, we're going to wrap up pretty soon. So yeah, exactly, Elias. Constantly evaluating new information. That's exactly what you're doing. And that's how you become good at anything. If you're discretionarily doing anything, just imagine any sport you play, basketball, football, soccer, you're constantly evaluating what all the other players are doing and what's going on the field. And then you're making decisions. Same thing. It's not like you're saying, well, if the goalie kicks it to the forward, then I'm going to short. It's, well, when he gets it, what's he going to do with it? Then I'm going to decide what to do. That's a bad example, but it's an example. All right, this session, I'm going to wrap a little bit earlier than we planned. I think I had it on the calendar till 9:30, but I have a little bit of a health issue I have to deal with at my end. And so what we're going to do, I think I've covered everything I wanted to cover in this session. And it's a reasonably good example of it. We just had, again, oh, now I have a third problem to deal with. That beep you just heard is my UPS, as we just lost power here. Okay, JVC, just FYI, if I disappear, I lost internet too. But
it's fine. Time to wrap up.
Exactly. So I'm going to start wrapping up. I'm running on my UPS right now, and I have two of them. One runs the other one, so I have a few minutes. But I want to just wrap up what I was saying. So look at how we came down here, and we couldn't even quite get to the first hour high of NQ, and it just keeps teasing it with these little wiki trades. So what a great place to be nibbling and scalping long, because if you're wrong, it's on the other side of the IB, and you're wrong. But so far, it has yet to challenge it at all. And if you were watching all of them together, they're all doing that together. We have a really nicely correlated day now. Look at the correlation of the indexes. Still being led by RTY, but they're all up substantially now. And this could be a really good spot, by the way, for a reversal into the close. The close today could be really good, which is the other reason I want to wrap up early. I may go live for the close for everybody, all TRG and the Scalpathon. But again, I've got a minor health thing I got to deal with, so I may not be able to do that either. All right. Thank you, CK. I really appreciate it. Thank you, Jeb. Yes, there was. Elena, I'm just reading your last comment, the positive delta on that push down. Absolutely, exactly. And that's why, you guys are seeing it now. I love this. You're starting to see the little pieces that give you those good decisions. Thank you, Donna. I appreciate it, Jeff, as well. Let's go ahead and say burning desires. Are there any other final questions? I really appreciate the good feedback and the participation today. This is cool stuff. Just don't get frustrated if you don't absorb it right away. A guy like Lance, really smart guy, owns his own business, writes code, has been in TRG for at least a year now. And, you're just starting to see this stuff. It takes time. Give yourself time. I have this on my Twitter page, and I'm going to end the session with this. If you go to Surfing the Markets, which is my Twitter, and look at the thing that I have pinned, you got to do that, guys. It's all about that. You got to let yourself blossom, and then you end up with this experience. This has been on my desk since 1976, and still right there. That's how the game works. Okay, if there are no final questions, thank you, Alfredo. Appreciate it. We will see you guys maybe at the close. I'll post an alert if we do a closing session. If not, don't forget, if you're in TRG, tomorrow morning session is a little later, the one that Lee does. And then we are doing our session before that tomorrow. We're starting at 5 a.m. We're going right to the open, and then Lee's regular session starts right at the open of equities. So this will be a really good opportunity to see the price action trading before the open into the pre-open, and then I'm going to shut up and hand it off, and Lee's going to talk structure, and you can really see the interplay between the price action and structure. So that will be a really good session. I encourage you to be at both of those. All right, we'll see you guys later. Have a good one. Thank you, JVC. I know what you're feeling, JVC, with your missing your alarm clocks. You were with us on the first two overnight sessions. That's a big change of schedule. So.
It caught up to me for sure.
It did me too. I spent all of yesterday afternoon sleeping. I slept for like 14 hours.
I slept through multiple alarms, multiple vibrations on my watch, and just my body clock. I woke up and just had no idea where I was, when I was. Yeah. Oh my God, it was crazy.
Yeah, I found, particularly when I trade overnights, and, a lot of times I get like that too. And I just learned that, when you're tired, sleep. And the other thing is that, I know you're just post-COVID. Ever since I had that, I've had just this, there's days like that where my brain just won't come online, and I just sleep all day. And I sleep through alarms, I sleep through doorbells, and that's weird. But anyway, get some rest. And thank you, everybody. We will see you for the next session, possibly for a closing session. I will post it if I do it.
Cool.
And that's a wrap.